Well, I think the nature of this financial crisis is going to be a lot different than the one we had in 2008, because I don't think the Fed is going to allow it. That's one of the reasons I believe that Powell is going to pivot, because if the Fed does keep raising rates, we will have a financial crisis that looks like 2008, only much worse. Because 2008 was about bad debt. It was about people borrowed money and they couldn't pay it back, and the collateral for the loans was no good because it was real estate and prices went down. Well, we have much more debt now than we had in 2008. I mean, by an order of magnitude. Everybody has more debt than they had back then. And so this is going to be a much bigger crisis when the defaults start. And all those banks that were too big to fail, that were bailed out in 2008, they're a lot bigger now. And when they fail, it's going to be a lot worse, except with inflation too high and the Fed fighting inflation, there are no bailouts. There's no TARP 2.0. All these banks are going to have to be allowed to fail. And that means customers are going to lose money, not just stockholders or bondholders. The customers are going to lose money because the FDIC doesn't have any money unless it gets it from the Fed. And the Fed isn't going to be giving out money if it's fighting inflation, it's taking away money. So I believe the Fed is going to pivot to prevent that massive financial crisis. And so what we're going to get is a sovereign debt crisis and a US dollar crisis. So it's going to take the form of a crashing dollar. And so the people who are going to lose money are not the people that are just holding subprime mortgages, but the people who are holding U.S. Treasury bonds or any bonds denominated in U.S. dollars, or even people that have U.S. dollars stuffed under their mattress. You know, the dollar has risen so far in the early stages of this big inflation because investors are still delusional about the Fed's ability to contain inflation and bring it back down to 2%. When they wake up to reality that inflation is going to be way above 2% indefinitely, then the dollar is going to fall through the floor, and then things like gold and silver will go through the roof. In 1971, the U.S. defaulted on its obligations because Nixon took us off the gold standard. But prior to that, if you owned a Federal Reserve note and you were a foreign central bank, you owned an obligation of the United States government to pay you gold. Federal Reserve notes were notes for gold, and the U.S. government defaulted on those notes. We told all of our international creditors, we promised to pay you gold. If you had $35, we promised you an ounce of gold. And they did a couple of devaluations first, but that wasn't enough. And then Nixon said, you know what? We're going to default completely. We're going to give you no gold for your notes. We're going to pay nothing. So that was an official default. And then gold went from $35 an ounce up to $850. So people who had U.S. Federal Reserve notes, thought they were going to get a certain amount of gold. They ended up getting a fraction of that gold because the value of the dollar imploded relative to gold because we defaulted on that promise. But we didn't officially default on treasuries, but we defaulted on the fact that those treasuries were supposed to be repaid in gold. Because when we repaid treasuries in Federal Reserve notes, that was the equivalent of gold. They used to say the dollar is as good as gold because it was not only backed by gold, but redeemable on demand for gold. So that was the first default. This default is going to be different because obviously we're no longer on a gold standard. So nobody who owns U.S. treasuries or U.S. dollars has any expectation that they're going to be given gold. But they do believe they're going to be able to afford to buy gold. They're going to wake up to the reality that gold's going to be so expensive in terms of dollars, they're not going to be able to afford to buy any. Because I think the dollar is going to implode, and I think it's going to lose its status as the reserve currency. And that is going to be a game changer for the U.S. economy because we rely on the ability to exchange the paper we print, U.S. Federal Reserve notes, dollars, for the goods the rest of the world produces. So we are dependent on the rest of the world for the goods that we consume. And we don't have to produce goods in exchange. And that's been the free ride that we've had on this global gravy train, and that's going to come to an end.